Welcome to our fifth annual State of the Industry. I'm Ingrid Fenn, President and CEO of SIREAS. It's such a privilege to host this conversation each year, and I hope you are as excited to be here as I am. At SIREAS, we work at the intersection of strategy and execution, advising global organizations on how to design CRE operating models and partnerships that perform. And that vantage point makes this conversation especially meaningful. And I'm pleased to convene it alongside such influential leaders who are shaping the future of our industry on a global scale. And Neil, Aubrey, Jamie, Andrew, thank you all for being here. Before we begin, I'd invite each of you to introduce yourself. So, Aubrey, maybe we begin with you.
Sure. And thanks for having me, Ingrid. I think this is my second or third year, but it's great to be back with this group. Aubrey Waddell, I lead global occupier services for Cushman and Wakefield.
Neil?
Hi, I'm Neil Murray. I lead real estate management services for JLL.
And Jamie?
I'm Jamie. I lead CBRE's building operations and experience segment, which is property management, facilities management, anything related to running buildings.
Andrew.
Thanks, Ingrid. Andrew Hallissey, and I lead the Global Occupier Services business for Colliers.
Thank you. Thanks for the introductions. For the past several years, our industry has been operating in response mode, reacting, stabilizing, managing volatility. And 2025 felt different, not because disruption stopped, it certainly didn't, but because we stopped waiting for certainty. We began to see what's structural and what isn't, where operating models truly hold under pressure, and where resilience is real. And we were reminded of something simple that strategy alone doesn't drive performance, execution does, capital discipline does. And that clarity shifts the mandate from vision to accountability. So as we move through 2026, the question is no longer how do we stabilize, it's how do we differentiate? How do we turn what we've learned into durable advantage? And that's what today is about. What changed? What must change? And what are we doing now to lead and not react? So, let's begin by asking, what did we truly learn coming out of 2025? And Jamie, I'll start with you. When you look back over the past year, what surprised you about client behaviors or decision making?
I guess I would say the most surprising thing for me was the sheer amount of decision making and velocity of decision making. It just was very clear for the preceding years, there was a combination of wait and see, of short-term renewals, of sort of keeping your head above water. And it's there in the data that there was a kind of dam that broke in 2025. Places like Manhattan had 40 million square feet of leasing. I think there was a lot of companies saying fine. And I think you just set this up in the question. Like, it's time to act. It's time to make some decisions. We can't just keep trying to open as many doors as possible. We got to walk through some of those doors and make some commitments and make some decisions about, the sort of real estate inputs to how we run our business, which is obviously very exciting for all of us in the industry, but it means the pressure is on because you have people building big headquarters. You have people moving into giant spaces, recommitting for another decade to places they were trying to figure out what to do about, and they need to rely on all of us to make sure that that goes well and that the whether it's warehouses and logistics centers or offices or whatever else, that they're serving the purpose they're meant to serve. But it was surprising the level of decision making, commitment of decision making, and rigor behind it.
Yeah, exactly. That's spot on. That's, absolutely what we were seeing as well. And Andrew, can you weigh in on what you saw?
Yeah, certainly. Well, look, 2025 was a pretty incredible year. And if we try and put it maybe in context, what were we seeing? What were we experiencing? A new US focused world order underpinned by tariffs, major geopolitical issues and concerns, most of which are ongoing. Huge advances in AI deployment, which broadly speaking, been very, very exciting and very positive. And then overlaying that from a real estate perspective, the continued recovery of real estate markets globally, both investment markets and occupational markets. So I think, Ingrid, for me, the biggest surprise, and maybe this isn't a surprise, and it's a little bit different to kind of Jamie's perspective on this. I think in reality, there is still a massive amount of uncertainty globally for companies, and it has definitely impacted their ability to make investment decisions because there's such fluctuation in the environment. A lot of them are struggling to know where to focus and what's going to come next. So I think at a global scale, we've seen an abundance of caution. But look, I think the other observation here is, given this continued level of complexity and uncertainty, operating resilience from a CRE perspective has never been more important to help underpin those decisions that are being made.
Yeah, I mean, I think both perspectives are true, and it's in a sense what is a differentiator, and when, organizations who are taking action and executing on a strategy are starting to see the advantages of that. And so, you're absolutely right. I think we are going to continue to see uncertainty. And so how do we operate within that is kind of what the next challenge and is as we look towards the future. Neil, from your perspective, as we think about the assumptions that the industry held, a lot of what we talked about actually last year coming out of 2023 and 2024, what have those turned out to be wrong or incomplete from your perspective?
Yeah, I mean, just weighing in on the previous comments, as you say, both are true. There was obviously a high degree of uncertainty, geopolitical, economic uncertainty, but the volumes of activity, the commitments to decisions surprised us all. We're sort of 7 quarters in a row of double-digit organic revenue growth, which says that activity is happening in the market and is back. More capital deployment to real estate, leasing volumes through the roof, as you'll have seen in the results of all of our respective companies. I think, I was going back and looking at my notes from Davos from 24 and 25, and some of the themes around sustainability and net zero, for example, sort of are still there, but the language has changed. It's more about resiliency, power, and the commercial impact of the cost of power, as opposed to conversations around climate and sustainability, which have sort of faded back into the background a little bit. I would say this, we're still in 2026 talking about return to office, which is incredible. And I think some of the assumptions we made in 2025 around the notion of sort of hybrid being here to stay, I think we saw a significant rebalancing in 2025 of hybrid working. Our sort of stats that come through, that what was once sort of 40% of companies that were fully flexible in their office attendance, it's down to 15% now, right? So companies across the board seeing the value of being together and cohesion and culture and all of those things. I think some companies over-rotated on their office rebalancing, their portfolio rebalancing. And so we've seen a lot of companies in market. Couple that with a lack of construction over the last couple of years or few years in major markets. I mean, we've seen high watermark rents in key spaces. So yeah, lots of dynamics that maybe didn't play out as we quite expected.
Yeah, great. Aubrey, can you add to that?
Sure. Yeah. So what I would say, there was a sense coming out of 24 in particular that among our CRE clients, that they felt like they had made the right decisions around probably the amount of space they needed. They had downsized where they needed to. They had made decisions to take more space in other places. They thought they were dialing in on what hybrid would look like, and that there would be a new normal in their portfolio and the way that they were strategically thinking about that portfolio. there's not a new normal because now we have this entire other set of disruptions that are facing our industry. Like, where are our clients going to be? Where should we be with our clients? How much space do we need? Or do these people need to be in this space, or is this their work going to be done potentially by an agent somewhere else? So there's a lot of additional uncertainty, I think, that has been introduced to the market that people had hoped might have normalized. And what I would say that we've seen is that we have clients who have learned from the mistakes that they made during the pandemic, whether they are shortly thereafter the pandemic and shrinking their portfolios more than they should have and now needing to take down more space. And so they're being much more judicious in their decision making now because they don't want to make the same mistakes. And so we're seeing that their desire to have a lot of information to help them to make right decisions, to make good bets instead of bad ones. I think that that's what's driving both the decision-making velocity that we see from people who have the right information, and then the circumspect consideration from those that don't feel like they have the answer.
I think all really great points. And to that, do you think where organizations are delivering well on that strategy is where they're really partnering with their providers from the sense of um, involving them in how real estate interacts with business strategy and what the needs of the business are? And because I think, when we work with clients, that is still one of the places where it's very nuanced, right? Where a lot of times that is solely really something that's done internally, and service provider partnerships can be kept at bay there, or argue maybe that's not a partnership, but right, that relationship can be kept at bay. How do you see that as impacting the effectiveness and change?
So you're absolutely right. Different models and type inside of CRE, without question. Our CRE leaders are being asked to be more strategic. Gone are the days when the CEO or a market leader wants an office in a particular place and CRE is being asked to execute on it. That pivot from execution to being strategic is something that is very hard to do without the support of a service provider that has access to lots and lots of data and can provide you insights to help you to make good decisions. So what I would say is our clients are asking us at every level to be more strategic, not just big global occupiers, but all the way, to folks doing expensive one-off transactions, multi-market transactions. They are expecting insights and analytics as part of the delivery of any brokerage transaction. And so, yes, I think we're finding that we're being leaned on more for strategy and to provide insights that our clients are now being asked to provide to their C-suite.
Yeah, and I think in a little bit we'll probably have some very interesting conversations how AI is going to impact that as well. But Neil, so we've talked about, I think the reality is uncertainty is here to stay a little bit, right? It's not going anywhere. At the same time, we are seeing movement, we're seeing decisions being made, we're seeing
Yeah.
changes. Um, and so, although we see CRE organizations making real progress this past year, where do you still think they're struggling to break through? What's like holding, in you from your perspective, what's holding organizations back from making real effective change?
Yeah, there's just so much going on. Full connection with their C-suite and business leaders, having the right information and data around sort of core business objectives to be able to make the right decisions. Obviously, there's a lot of mandates coming down from on high around AI deployment. So, we've seen more than 90% of our clients with AI pilots running across their organizations, still kind of little traction or impact. Only 5% of them reporting significant impact in what they're doing. I think we're going to talk about that a little later. I think the coming together of all of the disciplines of commercial real estate, whether it be portfolio or capital or indeed operations, is more important than ever. We still see some fragmentation in both service providers and client side. They've never been more intrinsically linked in terms of the decisions we make around location and around quality and design of space and then how it's run. And we still see that the clients are sometimes wrestling with those decisions, different data points, and making them independently of one another. You know, on the AI front, the analogy of you can't run a car on crude oil. There's a refinement process to go through, I think is a good analogy around the need for data governance and curation to get the greatest impact from the technology tools that are available to us now. And so I think that has been a blocker. We produce billions of data points as an industry, and making sure that we're capturing the right data in the right format in order to be able to fuel what's possible in our CRE organizations is still a challenge for many of our clients.
Yeah, I mean, I think it's such a strong point. And in order for any organization to be able to take advantage of what's coming with AI and remain competitive, having that basic data infrastructure is going to be critical. And it's it's still puzzling that it's so difficult to achieve, right? And so many organizations are struggling with that. And so, to that point, and if we think about how all of this change has impacted CRE operating models and how you've had to partner with CRE organizations differently. Aubrey, how do you see one, those models changing in response to, I think first, there's still enormous cost pressures going on, but also AI and technology changes and generally the shift of enterprises with the expectation of service providers to take on more and be more of a strategic partner.
Yeah, so I mentioned the importance of delivering strategic insights as opposed to simply execution. In terms of cost pressures, I think we've all probably experienced partnerships where the primary cost focus was finding savings in FM. I think our CRE leaders are very much understanding that the real money is in portfolio. And they need a service provider to help them find a way to rationalize their portfolio and make smart decisions where all of the big dollars are spent, candidly. So what that means for us and for the CRE organizations that we support is that we're seeing a move from regional organizations of CRE departments. So, Americas, Asia, Europe, that is still important for execution because of the importance of understanding local markets. But more and more, we're seeing this horizontal leadership emerging in a very dominant fashion with our clients. So workplace experience and strategy being a horizontal discipline that really is driving decision-making and strategy, and the execution is happening regionally, for example. Whereas before, a lot of that decision-making was happening regionally. Now clients are really hoping for consistency, that they want to ensure that their employees and their customers have a consistent brand experience associated with whatever it is, whatever service or product it is that they are providing. And so we're seeing actually the CRE organizations that we support evolve in that way to provide that consistency from a discipline basis as opposed to just regionally.
Yeah, I think that's a really good point. And, I was going to actually ask you the question, and I think that's one of the answers is, elevating from that regional or local perspective when it comes to portfolio strategy into something that's more of an enterprise view. But what do you think are other capabilities that are limiting clients' ability to really drive effective portfolio strategy? Because I think, you made a really good point. There's historically been a lot of focus on driving down cost in FM, but there's a lot of other mechanisms for adding real value to the portfolio that aren't necessarily just about that kind of cost savings.
So, Neil spoke to this, and I absolutely agree. Your data has to be clean and accessible and well governed so that you can get the inputs and the insights that you need out of it in order to make good decisions. That does not, unfortunately, exist everywhere. It's something that many of our clients continue to be on a journey to achieve, particularly if they're a business that is highly acquisitive and has information coming from lots of different legacy companies that they're trying to rationalize. It's a change management exercise because you have stakeholders in your business that are interested in your strategy, but it may not work for them. And so often we see that there are differing mandates in terms of the centralization, organization, and call it power of the CRE organization to help the company make decisions about where to locate. Those sometimes are made by the business regionally, notwithstanding the fact that that doesn't necessarily mean the best decision overall for the enterprise from a CRE perspective.
Yeah, absolutely. Andrew, how are you seeing Siri operating models continue to change and evolve, and how is that aligning to changes in enterprise expectations?
Yeah, it's an interesting one, Ingrid, because look, I guess if we look back over the past 3 decades and consider what have been the biggest changes we've observed within the industry, we've seen a proliferation of outsourcing, very significant supplier consolidation. The industry has certainly globalized. We've seen significant digitization. ESG continues in most parts of the world to be embedded into CRE decision making. And we've seen this gradual shift from vendor-based relationships to partnership-based relationships. But look, globally, I would suggest that major companies are still kind of all over the spectrum relative to how they operate across each of these different characteristics. Some are more advanced in some areas and others are less advanced in others. So look, I think the key question from here is what to do next and how do the CRE functions accelerate their success? So how do they build an innovation engine within the CRE organization? Where do they focus their efforts and deploy their scarce and limited resources? How do they elevate performance from good to great, in Jim Collins's terminology? Where do they deploy AI in a way that's going to be effective and impactful, that will work and deliver positive outcomes? And kind of most importantly, how can CRE really advance and enhance organizational culture and operating resilience for the business?
So, Jamie and Neil, I'll throw this question to you, but as we continue to have this discussion about how client needs are changing, how are your firms investing in, and what are you investing in to continue to help you to meet those expectations? So, Jamie, we can start with you.
What are we investing? So, let me say one thing actually on the previous set of questions, just simply,
Perfect.
I think we've talked a lot about the challenges that big commercial real estate organizations are facing. And it's a really tough job. And it's a really tough moment with particularly this question of what's AI going to do to workforce sizes and things like that. And having said that, I look at most heads of real estate, most commercial real estate organizations, and I would say I think they had a good year in 25. That a lot of them, I saw them coming out of the year feeling like, hey, we made some decisions. We're out of this debate over, are we hybrid, are we not? I'm not the bad guy that everyone keeps coming to and I can't do anything right. And I hope people are able to take that confidence into 26 and say, we're creating a lot of value from our organization. I'm not just a cost line. I'm on a bit of a hot streak and sort of continue with that. And I think for all of us running service providers that can help amplify that, we want to do our part in that. The investment question, I would say it's twofold. So the first, the most obvious, relates to technology, AI, and the application of that to real estate. And I think one of the big things that doesn't get talked about that much publicly is people are obsessed with the application of AI to white collar processes, to taking data and providing richer analytics on top of it, to automating cash reconciliation and things like that. And that is true. And that is probably the most fundamental current application of it. And we all have to be great at that and help our clients be great at that. But there is obviously a coming wave of the application of AI to the physical world, to how you actually run physical things. And you look at what Amazon has done, sort of digitizing and optimizing the way you run a logistics center, or what UPS has done with that exact thing in a delivery sort of logistics program, or what Foxconn has done in manufacturing. And you can't but say the running of big physical assets in big buildings is a bit behind that. And so I think one of the big areas of investment that CBRE is making, and that you're I think going to see in general, and is the application of technology and of AI to the actual physical operating of a large, complicated physical asset, to automate it, to make it safer, to make it more efficient. I'm very excited about that. And I think our clients are excited about that. And I think it's kind of it's in certain ways, overdue. Uh, the second, I think, big, well, let me leave it at that. Because I think that that really is the primary sort of um differential area of investment focus in 26 vis-a-vis previous time periods.
Neil?
Yeah, I would say, first of all, agree with everything Jamie just said. I think the three major buckets of investment. One, which is not very exciting to sort of expose the internal wranglings of a service provider, but we have to be able to deliver total cost of ownership for our clients. We have to work on our own structure. We've been investing heavily in the sort of one JLL concept, making sure that any seams that exist in our business are minimized, and that we're bringing the best of the organization to bear every day, which might sound intuitive and obvious, but it takes work, right? If a client is in a position or talking about renewing a lease, where is the investor or landlord in terms of the financing timeline or refinancing timeline? So the data points produced in all parts of our organization, how do they come together? We've had to invest in platform, obviously, in service line capability, whether it be in projects or FM and portfolio. How does that intersect with the specifics of market verticals? So again, working on. So first point is structure, with a view to, I think, Aubrey's early point about total cost of ownership. We can't get in our own way. So the one JLL mantra. Second point is data and AI, obviously. I have all of my team waking up every morning and thinking about how to transform their organization and their clients' organizations. This is, we could talk about it for hours, but it's very real, from the sort of the Dan Schumann document that scared the life out of everybody a couple of weeks ago and took down our stock prices in a couple of days based on market sentiment. While some of that I would maybe disagree with elements of it, the opportunities are real. The opportunities not just for, in Jamie's words, sort of white collar efficiency, but adding a different level of creativity and decision making to everything we do. And then with that sort of those two investments in how we operate and how we use technology, we must double down on culture as an organization. We must double down at a time of the growth of artificial intelligence, of uncertainty among the thousands of men and women that we employ and that work in our client sites. The notion of worth and meaning and just general kind of well-being across our people and how they matter. I mean, I talk to people. I've banned the use of the term headcount in our organization, and I'm saying it to anyone who'll listen. Can we stop using that term, headcount? Having grown up in Ireland where that was used for cattle, right? We can't dehumanize in a world where people feel genuine uncertainty and concern in the world around them. I happen to believe that all these things will augment and improve and open up new opportunities. But yeah, at a time of exciting technological advancement, we need to be more human than ever.
Yeah. So it's interesting you're saying, well, not interesting. It makes sense that you're saying that, because I had noticed a quote from, I think it was a LinkedIn post from you, but you had said, as the business landscape shifts and companies are investing more in AI, an obvious question comes about the human toll of this technological revolution. I'm very positive about AI and believe it will elevate, not displace, human performance, reducing administrative tasks and delivering analysis at lightning speed. But we have to acknowledge that there is disruption and things will change a little. And I thought that was very powerful and true. And not only as we think about culture and change management and how we are, collectively managing our organizations as we continue to use AI to support us in being more efficient, but what does that mean to the delivery models that we're providing to clients, right? And you kind of hit it on the head with this conversation that's incessantly about headcount, right? And so
It's our own
as
conversation. Yeah.
yeah, and as you are bringing more solutions to the table that are looking at services in a different way, I think we are collectively as an industry going to have to start to think about the model differently, how we talk about how services are paid for differently, right? It's going to have all of these downstream impacts, and I think not only the investment in technology itself is critical, but it's also thinking through, what these impacts are going to be to the business as well. Any other thoughts when we talk about AI tech investment before we pivot a little bit? Great. So Andrew, I'll ask you this question as you shift just a little bit, and you touched on this earlier in your initial statements, but as geopolitical uncertainty continues to persist, and it will in 2026 and beyond, how should CRE leaders really be thinking about recalibrating their portfolios, strategies, models, to balance resilience with performance in this environment?
Yeah. Such an interesting, thought-provoking question, Ingrid. Of course, recalibration is one of my favorite topics to talk to. So, look, I think we should not assume that what got us here is going to get us where we need to go. And we may need to unlearn some of the equations of the past. But to know where and how to recalibrate, organizations and teams need to be very honest with themselves and understand what's working well within their functions and where there's opportunities to make it better. So to point out the absolute obvious, specific to CRE, occupiers absolutely need to ensure that CRE strategy is directly and highly aligned to the needs, requirements, and expectations of the core business, because if it's not, the entire model falls apart. But the challenging point here is, given the complexity of today's operating environment, that's a really difficult thing to do because the roadmap is not necessarily clear. And depending on what sector you're operating in, again, there can be very, very high degrees of complexity and uncertainty. But that's not an excuse to roll over. It's not an excuse to be complacent, or for failing to take action and to lead. So I think that the observation here is it's critical to define the baseline level of performance, to build that roadmap, but to ensure that the roadmap is agile and you can pivot and tweak based on what's happening within the operating environment. CRE functions still need to take some risks and try new things, and realize that not everything is going to work, and if you fail fast. But I think also, moreover, to have some fun in the process, because back to Neil's observation, which I think is also spot on, this is a people business and culture is absolutely mission critical. And if we can't have a little bit of fun in what we do every day, what's the point?
Okay, thank you. Neil, I'd love to hear your thoughts on this as well. And also, you touched upon geopolitically aligned, but the shift in how clients are thinking about sustainability as an example. And I think that also could look different from region to region. And certainly that's very apparent in the US, like right down to how contracts are written, right? It's you cannot miss that it's there. But those conversations definitely have shifted in a different way outside the US. So yeah, I'd just love to hear your thoughts on all of
Yeah,
this.
I mean, on the first part around, your question around operating models and how they need to shift. I think we moved from the mantra in CRE of location, location, location. It's now location, resilience, reliability, right, and energy. A whole other topic, but much more significant part in decision making. I think portfolio optimization used to be a project that was done every few years. It's not that anymore. It's a sort of a platform of ongoing activity and scenario planning, and with limited information, being ready to act decisively when the time comes by having run various scenarios. Operating models, I think for our clients, I mentioned before, but the integration of the different functions has never been more important, the different facets or elements of real estate. And the final point in terms of how our clients should be recalibrating, I would say, I met the CEO of the Mayo Clinic, and he said to me, he said, Neil, if your doctor is not AI first, you need a new doctor. And so I would say the same thing for CRE. I mean, the power that's available to us now with the latest models, if we're not leveraging data, if your team are not waking up every morning and thinking about it, then changes are required. So that's on the first point. On sustainability, briefly, I think the best companies in the world are still doing the right thing every single day. It's still important. There are still regulatory requirements, city by city, state by state, country by country. So it hasn't gone away. The language and narratives have changed a little, like many things, but it's still an extremely important part of what we're doing, and remains a major focus for our organization.
So, kind of continuing on that thread, if Jamie, and we'll start with you here. What are organizations going to need to be doing differently to really position themselves for the next 3 to 5 years to continue to be effective, have competitive advantage, and really be able to absorb the advances in technology that are coming?
I think I would start by saying there has to be a recognition about the unbelievable importance of physical inputs to the success of any business on earth. And I don't want to start so philosophical, but I actually do think when I look at our industry and I look at what changes would need to be made in order to sort of meet the moment, you can really fall prey to thinking Google lives in a world of ones and zeros, or Meta, you kind of have this digital economy, and then you have this. And if you look at what is necessary for any of these companies that maybe 10 years ago you might have really thought of as only living in the digital realm, they are so physical at their heart. They are, Meta is actually manufacturing things. They have data centers necessary to actually move all the information. They are doubling down on the importance of their people being together. And I think that fundamental recognition that it's not a cost line, it's not a thing that you have to check the box, that for every company, including the ones that appear on the surface to be the most living in the world, sort of digital realm, one of, if not the most important determinant to the success of those businesses is essentially the physical sort of inputs to that business. And then you have to measure that. So I think it's honoring the importance of not real estate narrowly defined, but the physical economy and the physical inputs to the business that you run real estate for. Defining in what way that's the case. Okay, so for Exxon, for whatever, what are the physical inputs to success of this business? How do you measure that? And I really do think this industry has a chance to have a huge leap forward in how metrics driven it is, where you're able to show the CEO, this is the way in which the physical inputs of the business drive the overall success of the business. Here is how we are measuring that that's actually happening, because you manage what you measure. And then you get to sort of, now you have a framework to put the advances in AI into, to say these buildings are not assets to be bought and sold. That is, I think, maybe the big the simplest way to put it. They're not just, piles of bricks. They are fundamental pieces of an operating business. And how do we optimize and sort of extend what impact they have on the business. You have your strategy framework, you have your metrics that sit behind that, and then you're able to say, here's the way that by using AI or by really leveling up our portfolio strategy and optimization, or by really leveling up how functioning this office is as far as people wanting to be here and the types of collaboration they're having. Here's how I can take you on that journey of how it impacts the business. That's what everyone really, I think, needs to be doing.
Yeah. No, I think all really good points. And I think all of you touched on this around, one portfolio strategy not being project based, but what the service providers can bring to the table. And it's so much more than just location strategy or understanding how much space you can have. But if we think about how changes in recent law has changed economic positions on how capital is treated and things like that, there are conversations that can be elevated beyond just what, maybe specific people within a corporate real estate organization are doing to align with broader strategies of the entire organization. And I think that's really one of the big shifts in the way clients are expecting to partner with service providers on the portfolio side. Sorry. So Aubrey, to that point, can you share your thoughts? Whether it's on Siri models in general or how AI is advancing analytics and how that's really going to change the outcomes that we're able to provide to our clients.
So I already touched on, efficiency is just table stakes, right? So we should all be getting more efficient at a lot of the work that we do. The outcomes will be changed because AI enables us to make better decisions, place better bets, make decisions at pace, where before we spent a lot of time gathering information and insights. That's what I think that we will see in terms of outcomes. That's what we should hope that AI is going to bring us. I spend a lot of time thinking about 3 years from now. And 3 years from now, I will look back and say, what do I wish we had all done differently? And I will say this. This seems like it was the AI webinar. This is here to stay. None of us want to be the last horse trader in Detroit. We will adopt these tools. The differentiator is going to be how fast do we do it? And are we doing it in an effective way? And that is all about leadership, because you have to have the right leaders to drive the change, not just by force, but through followership. You have to have people who are good communicators, and you have to really lean into the human side of leadership in this period of disruption. So in thinking about what I would say to my colleagues, my clients, make sure you have the right team at the table.
Yeah. I think, very important and a point you touched on a little bit, and I think has been similar with every big evolution of technology, but it's making sure you understand what tools align with the strategies and the needs of your organization, because there's a lot out there that's changing really quickly, and I think that can be a very overwhelming and also time-consuming effort if you're not thinking through that in a thoughtful way. So I'd love to hear from all of you, but Neil, we'll start with you. If you think about how firms are partnering different in the future, how your clients are partnering with you, if you could change one way about how they think about the partnership with their firm or how you'd like clients to partner with you differently, what would that look like in the upcoming years?
Question, Ingrid. I think the first point is the word partnership and not less of an outsourcing function. I think we've moved way beyond this notion of outsourcing and risk mitigation, but more using your partners as an extension of your team toward the highest level of C-suite objectives. I think Jamie said it. This is not a factor of production anymore. Real estate, it's something much more. I say all the time, it's the single greatest manifestation of a company's culture and ambition, and therefore the CRE department, I think, plays such a significant strategic role, the last number of years have given us, our clients, a much louder voice at the table, and we can partner in much better ways now. I want every CRE leader that we work with to share their personal objectives as much as they possibly can with me, that we incentivize teams to be entirely aligned with the objectives of our clients. And the final point, I think it plays to an organization like yours, Ingrid. I think that, these things come around every 3, 5, sometimes 10 years, and sometimes the procurement functions in our client organizations, they're not used to these highly complex, enormous scale deals. And as such, in a desire to demonstrate value, in desire to get to proverbial apples to apples, we can sometimes blunt a little the potential of the models, the economic models, the incentivization models, inadvertently, all in service of a better outcome. But you go back to cost plus because that's easiest to compare. You go back to prescribed staffing models. All of those things have to be far more dynamic now, right? The use of technology, the augmentation of what we do, the pursuit of outcomes. And so, I would love the models and how we engage with our clients to evolve, and for you, Ingrid, and your team to help us with that journey.
Yeah, I mean, something we've been thinking a lot about, and I think we'll have to partner with clients and you all to think about how that really does impact how you partner together from a commercial perspective. But I think, more importantly than that, there is the financial elements, and of course that's always going to be important. But we've seen over and over these partnerships, they fail or they thrive based on the people and the way that the people collaborate and communicate together. And
Absolutely.
it's always fascinating to me to see, when that happens in a magical way and when it doesn't, and, why there are nuances there. And Aubrey, I'd love to hear your perspective on that as you think about, you know, clients and service provider relationships that you have that are thriving and really successful, or those that are, maybe we say, don't enable you to bring all of your best practices and tools. What is it that you think is fundamentally or structurally different, about those relationships?
Such a good question. And I would like to say that all of our client relationships are wonderful. And great partnerships. We all have that, right? No, I mean, realistically, some relationships can be more challenging than others. The best ones, let me focus on those, are where, look, things are going to go bump in the night for everyone, both on the client side and the service provider side. The mindset about working through anything together, whether it's an opportunity or a problem, underpins the success of any relationship. I would also say, and this is consistent with Neil's point, our incentives have to be aligned. And so where the prevailing model continues to be about headcount and burden rates, that is not going to incentivize anyone to rapidly adopt the advances that we know we need to adopt to move the industry forward. So if we can build into any partnership, and it doesn't have to be just a new one, ways to share incentives to drive the best for both parties, to have our client success be our success, that's when the partnerships work the best. We also, we meet clients where they are, right? We have varying scales. Some clients want to buy every single service that we can deliver everywhere in the world, and we are happy to do that. Some are more regionally organized and want to buy one service in one region. You have to model your organization consistent with where your client's organization wants to be, where they are and where they want to go. If there is a mismatch between the way you're organized and the way your client is organized, it is a recipe, not a recipe for success. I'll put it that way.
Yeah, no, absolutely true. And I think, by the way, even though these conversations can be ones that you might want to dance around a little bit, I think every client that we work with wants to understand what makes a partnership truly efficient. It's not about whether it's difficult or not, it's whether it thrives, meaning it's operating in a way that's effective to the business. And so finding where those pitfalls are on both sides is, I think, really critical. And you all have touched on this, but I think now more than ever, these models are going to change because we're looking at how we deliver services in a very different way with technology and the like. So as to that point, and Jamie, maybe, and Andrew will give this to you, but what are the capabilities that CRE organizations and leaders are going to need to continue to build in order to adjust for these changes and accommodate for them? And like Andrew, I think you made a comment, I forget where, it might have been on Squawk Box or something about the AI patents and labor being a much slower ramp up in Europe compared to APAC and the US, if I'm getting that right, I think. And you specifically called out China and India. Um, but to those points, as you think about what is the type of talent that CRE organizations are going to need to have in the future, what does that look like?
Yeah,
I,
Ingrid, I think this is a really, really fascinating topic because look, our view is that there is an abundance of capability accessible right across the industry. Apps, bots, agents, dashboards, analytics, processes, established management practices, excellent consultants like your good self, people and ideas. But the core issue today is whether the talent base within the industry have the skills, the knowledge, the expertise, and the wherewithal to effectively use and leverage these resources and capabilities to drive better business outcomes and accelerate the success of their business. So, look, I think my call to action here is that the industry needs to build its muscles in this area, and we need to be stronger on multiple fronts. So we need to take stronger leadership positions. We need a clear vision in terms of what it is we're actually doing and how we're doing it. There needs to be strategic intent in everything we do. We need to invest more to build the capabilities within both service provider teams and within the CRE organizations themselves. We need to create bandwidth for people individually to grow and develop and to access those skills. And absolutely, we need much better training and development for our people and our teams. So, look, if we can actually deliver and achieve those objectives and those outcomes, there is no question that our collective performance will be so much better to realize what I think is a pretty unprecedented opportunity that exists to transform the industry at the moment.
So, Jamie, I just realized how quick we are on time, so I'd love to hear your response and any other thoughts you have as we wrap up, because we have a few minutes left. So you can touch on anything you feel to share at this point.
I can maybe I'll combine the final two questions you had asked. Um, Let me actually start by saying I have been by and large extremely impressed with the wherewithal and capability of most large real estate functions at companies. Like what capabilities you need to meet the moment. What you can always kind of have this Sturm und Drang and this sort of sense of we're not keeping up, we're not keeping up. But I think let's say you looked at most Fortune 500s, a lot of them would say, I'm struggling to have my digital team keep up with what the needs of my business are. We're not putting out the software I would hope we'd be put, whatever that is. I think by and large, once in a while you meet a real estate team of a large company that is really struggling to meet the needs of the company. But I would say most people on this webinar are probably like, you're in a good spot. You have to keep evolving. But people are largely delivering against the needs of their business, and they have the right pieces in place to do that moving forward. I think one of the things that is necessary is to be able to work in an ecosystem of partners, because this is such a large global physical endeavor. There is no way that anyone could just in-house everything from signing up buildings in Brazil to running buildings in Shanghai, et cetera. And I think being very good at that, you see the benefits of that. And it's easy to say, you got to be partners, not have a vendor relationship. But the things that I think companies have to be able to do better and better over time, and this relates to my earlier point about buildings and real estate serving an actual fundamental business function, is to be more outcome based. I do still think I see in a lot of large real estate organizations a sort of, we have to keep the lights on. We have to show that this building is open and running. And I think we really are moving away from a world where you get credit for a thing simply existing. You have to be able to articulate what its fundamental purpose is and show that it's doing that. And I hope that the partner relationships evolve in that way. So there's more outcome-based pricing. There's more, you can't be partners unless you can align together with clarity on what you're trying to achieve. And then if you know that, you can sort of, you can align incentives around that, you can align team structure around that, but so much flows from a real clarity around what the purpose of these physical assets are, what the purpose of these real estate functions are, and being better and better over time at that and the ability to architect around that. And then I think the second thing I would say, and this might be controversial, and some of you might say this would not be possible in my organization, but I do think AI and the application of new technologies oftentimes works best with experiments, with pilots, with saying the data is 80% of the way there and we need to start somewhere. And I actually think with this latest wave of advancement in AI, that is more credible. So that we need to spend 3 years cleaning up all our data and have one giant enterprise grade solution from day one. That I don't think will work. So all of us and all of these organizations do need to be a little more nimble and have to figure out ways to deploy experiments and individual touch points and find out what they can do with their existing invoicing data, with their existing asset register. And it might be that you don't need to do a 3-year project to start completely from scratch and create a sort of harmonized data lake for every possible thing in your business before you can start to use more advanced technologies to move it forward.
Yeah, I think so many things we could keep talking about for hours, but we have a few more minutes left. So Aubrey, I'd love to hear just a couple minutes of your last remaining thoughts, what you want to share to the audience.
Yeah, this is a really exciting time. It feels to me like almost everything is about to be knowable quickly. And so when I think of our industry, built on relationships, built on gut feel, built on anecdotes and experience, we have to shift our mindset to helping clients achieve outcomes that are data driven and have proof. And that is the changing mindset. When somebody asks why, that's what they're asking you to tell them, that the data actually supports a decision that you're recommending for them. And the answer that I don't know or it worked for me last time is not going to work anymore.
Thank you. Neil?
Yeah, listen, I think most of it's been said. A really esteemed group of panelists. I've really enjoyed spending time with you all. Some great points. I love the point on experimentation, by the way. I think the notion of sitting around and waiting for centralized IT functions to come up with the answer. Everything has to be business-led. We have to lead. We have to have specialists in our organization. I would say if you don't have a paid GPT or equivalent or Claude, get it. The difference between it and the versions that are inside our five firewalls from 12 months ago is flip phone versus iPhone, and play with it and iterate. And I think if you think this is somebody else's responsibility, if anyone on the call thinks it is, then that mind shift needs to really shift. I mean, I have to remind myself to spend time with it every single day to understand the art of the possible. But yeah, as you mentioned earlier, I'm super excited. I also agree with the positivity from everybody else that SIREAS had a good year. It's in a good place. Our clients are getting smarter and better, and we're achieving some pretty cool stuff together.
Right. Andrew, 2 seconds.
Last word. Well,
Yeah,
look,
last
let's not forget how privileged we all are to be participants in this industry, because it is an absolutely wonderful place to be, with absolutely incredible people and colleagues and partners and clients that we get to work with. So as service providers, we are incredibly appreciative of all of the support and recognition and partnership that we get from all of our clients. So one mind shift shift to finish with. Better never rests. Let's keep thinking, how do we go from good to great? And remember, it's the combination of small incremental improvements that compound that often deliver the most transformational outcomes.
Great, thank you. Well, so as we wrap up, I just want to thank our panelists, of course, and the audience. I look forward to this event every year, and I think it's always really insightful to hear the perspectives of all of you. So we appreciate the partnership and engagement, and also the time to take this hour away. So thank you all, and we look forward to the continued conversation. And as Neil said, get in there and get your hands a little dirty with AI, and let's see what we can discover. So have a good day, everyone.
Thank you, Ingrid.
Yeah.
Best of luck.
Bye.